afternoon and welcome to dissects Asian Midday Market Watch. I'm Brian Fernandez and with me is my co-presenter Samantha Voon. Now, let's start by taking a look at a summary of market action for the first half of the day. Sam, over to you.
All right, so Asian markets increased on Thursday following gains from Wall Street, and weak economic indicators boosted expectation that the Fed might lower interest rates by September. In Japan, the Japanese stocks notably performed well recently, recovering most losses from the second quarter and approaching record highs. Throughout the region, markets mirrored Wall Street strength as the S&P 500 and Nasdaq Composite achieved record high levels after disappointing labor and purchasing managers index figures heightened predictions of a 25 basis point cut in September. However, optimism was somewhat subdued by the Fed's June meeting minutes, causing the US stock index futures to trade sideways in Asian markets. Investors remain cautious due to anticipating surrounding the upcoming non-farming payroll data to be released on Friday. So to zoom in Japan, the Nikkei 225 and Topix indices increased by 0.2% and 0.5% correspondingly on Thursday. The Nikkei surpassed the 40,000 mark earlier this week for the first time since April and came close to the previous peak levels reached in the first quarter. Meanwhile, the broader Topix momentarily touched a new high of 2890.47 points. Recent rises in Japanese markets were fueled by weakened economic indicators affecting the yen, leading to speculations that the Bank of Japan might have limited room to adjust policy. Despite concerns about softening Japanese economic growth that could potentially impact company earnings, investors mostly focus on the positive. Notably, there was a significant downward revision in the first quarter gross domestic product figures reported by the government this week, indicating a more severe decline than initially thought. The upsurge in Japanese market also saw strong contributions from tech stocks, mirroring the enthusiasm for AI that boosted their US counterparts. Over across the broader Asian markets, there was a notable uptick as many believe the Fed will commence lowering interest rates come September. According to the CME FedWatch tool, traders are now indicating a close to 66% probability of a 25 basis point decrease, reflecting an increase from the 59.5 likelihood of projected just the day before. In South Korea, the Kospi saw a 0.7 increase, and in Australia, the ASX 200 experiences a robust surge of 1.1%. Recent data from Australia revealed a larger than anticipated decline in the country's trade balance for the month of May. Looking ahead, the future pertaining to India's Nifty 50 index are signaling a favorable start, with both the Nifty and the BSE Sensex 30 achieving historic peaks over the course of this week. In comparison to other markets, China Shanghai Shenzhen CSI 300 and the Shanghai Composite indexes didn't perform well, dipping slightly due to concerns about the sluggish economics recovery, and this decline in mainland stocks had a minor impact on the Hong Kong Hang Seng Index. The outlook towards China didn't show signs of improvement, especially with the disappointing growth in the service sector, according to the Private Purchasing Managers Index data. Doubts arose regarding Beijing's reduction in stimulus measures, raising questions about the extent of additional supportive actions the government might take. All eyes are now on the third plenum of the Chinese Communist Party, an upcoming high-level meeting anticipated to offer more insights into China's economic trajectory. So that's all for markets update. Over to you, Brian.
Now, thanks, Sam. Now, let's bring on our guest today, Kian Soon from Astral Asset Management, coming to us out of Singapore. Now, Kian Soon, great to have you on the show, and thanks for coming on.
Good afternoon.
Now, Kian Soon, for a start, we want to get your insights on the record high closing yesterday of the S&P 500. All looks rosy, but the key thing is if you look under the hood, the data is now telling us that the slowdown is coming. Tell us about what your thoughts are around the numbers.
It's quite ironical that bad news for the economy is actually good news for the market, isn't it? And that's exactly what plays out, last evening, when the market actually welcomes the fact that there were signs of an economic slowdown from the purchasing index data as well as from the employment perspective. So this is the point where I think the market is really anticipating and hoping that, the Fed might, take in all this data and they are looking forward to, a rate cut in the coming months. And I think as mentioned, the key is in the Fed's minutes. You can find more than 3 different places that they mentioned that they are still going to be very cautious in terms of looking at data. Even you have the inflation data coming in May, suggesting that inflation might be under control, but they emphasize the fact that they will need more data points going forward.
Mm-hmm. So do you think the Fed is not in any rush to cut rates at all, given that there is the 11-9 split, and also that the US presidential election is coming soon? What do you think will happen?
The Fed is in a comfortable position and in no rush to cut rates, as they know that given the fact that majority of the Fed members are still looking at a rate cut in December or next year, while only a minority is more pro for a rate cut in September. So Jerome Powell definitely will look at the data coming out in June, July, this summer, to validate whether there is actually, if inflation is really under control, and at the same time awaits for more economic data in terms of understanding whether the economy is really slowing down to a fact that they have to take action quickly. At the same time, a rate cut in September, is a tricky one, or even November. As you mentioned, there's the US presidential election, action is fully played out. We have listened to the first presidential debate, last week. And I think that there will be most likely to if you don't get a rate cut in September, the next discussion will likely be after the election, because having a rate cut too close to the presidential election is always very tricky. Yeah.
Mm-hmm. Yeah, just wanted to touch a bit on the ADP employment report. So it showed a slight miss in the private payroll for June, right? How significant is this deviation, Kian Soon? And I mean, what impact could it have on market expectation moving forward, maybe in just the short term?
So employment data has always been very robust in US, and that's why the concern about a slowing economy wasn't really strong until this is the time where the data actually starts to show some differences. Again, it's 1 month of data. We should really look for a trend rather than commenting on data points. Because it's still early days, and I don't think the situation warrants for immediate action as well. For the Fed to take immediate action, it's just one of those. People are looking for the pivotal points. People are looking for the key, changes in terms of the trends. And let's see, right, in subsequent months whether this is the start of a really a different, downslope going forward, or this could be just a way of a data point that is an exception rather than a norm.
Now, Kian, so now bringing us closer to home again. Now, we're in the second half of the year. I think for most funds and most investors, we've done well in the first half of the year. What is your outlook for Asia in the second half of 2024?
I think for Asia, you could look at it in two halves. And the reason I said so, if you look at Japan, Korean, and even the most Asian markets, with the exception of China, Hong Kong, most of these markets, stock markets and equity markets, are very sensitive to what's happening in United States, i.e., the interest rates, the potential for any Fed's decision, and you could see their stock market swinging. Wherever there's an announcement of rate cut, it will be sizzling hot, and wherever there's signs that inflation is still too high, there are no rate cuts, then they will take a step back. We have been seeing this trend, in fact, right from the start of this year, right? No surprises. What you have seen from Korea as well as Japan market this morning is also not a surprise, right? The other side of the Asian markets, comprising of Greater China, basically Hong Kong Chinese market, is much playing of a different tune. Their interest rates situation is different. They are facing a deflationary pressures, not inflationary pressure. A lot of eyes will be on how China gets itself out of the economy, slowdown and situation, and that, as you mentioned, depends on a lot of government policies that is going to be announced. So the coming third plenum in China to be held in the coming weeks will be closely watched, as markets really wants to know what else the government will do to actually support its declining economy. The first half measures was pretty strong, and everybody is just awaiting the effects of these measures, as well as are there going to be a second round of policies coming in order to strengthen the economy.
Okay, thank you, Kian Soon, so much for coming on the show today.
You're most welcome.
This has been Dissects Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.dissects.asia, as well as our social media platforms. It will be on our syndication partners' TV stations, radio station, and website. Remember to like and subscribe. Thanks for tuning in.